I highly recommend you guys watch this video in its entirety. We're going to be going over exactly what's happening in our markets and potentially what is coming next, or at the bare minimum, because we're not fortune tellers, what you need to be watching for throughout the rest of this weekend heading into trading on Monday morning. Yes, big money is fearful. Yes, they are buying gold. Yes, they are buying bonds, when in all reality, inflation expectations went dramatically higher on Friday. CPI was pitiful. PPI was even more pitiful. This is not exactly the greatest situation. We now have Ray Dalio, longtime billionaire investor, saying, hey, there's a 50% chance of World War III, starting because of this conflict. So I say this all the time, and I'm going to use it here in the intro. The markets can handle bad news. They cannot handle uncertainty. I think we're going to get a lot more clarity on how far this situation is going to go within the next 12, potentially 24 hours or so, but sooner rather than later. So I want to give you guys an update on this Israeli war, what in the world is going on the ground, because it does affect your money. As you've seen on Friday, Tesla stock was down about 3%, the NASDAQ down about 1.5%, and the downside, well, there could be a lot more of it if this situation does take a turn for the worst. What's Hezbollah saying? They just made a statement that does not exactly sound encouraging for the markets as well. Now, surprisingly, if you take a look at the NASDAQ, the longer term chart of the NASDAQ actually looks pretty bullish. It looks like you're seeing a cup and handle that is almost fully formed. What is a cup and handle? What could that say about stocks throughout the rest of this year? And if that is not enough, we're going to get into what in the world's going on with Tesla. The SEC just created a new rule for transparency around short positions. Tesla is the most shorted stock on the markets. This could have a direct correlation to trading activity that we do see in Tesla over the next week. We're going to look at the 13F filings that are coming out from hedge funds, institutions, the option positioning for this upcoming week, and much more. I hope you are ready for a jam-packed video. If you are not, you might as well click off now, because there's going to be a lot to unpack in this one. Hit the like button if you own Tesla stock at all in any degree, shape, or form. Hit that like button, let everyone know, as well as subscribe to the channel if you guys want to stay up to date with all of this information each and every single day on the broader markets as well as Tesla stock, in hopes it makes you a wiser investor and helps you make more money. I think that's the ultimate goal. So we're going to start off this video with this Israeli war, what the situation looks like on the ground, what you need to know, what Hezbollah said, and what Ray Dalio just said. But before we get into that, 30 seconds, let me give you a quick backstory of what happened on Friday. Big money is fearful. Big money bought bonds, thus driving down yields. Big money bought gold. Especially when you see big money buying gold, that's a problem. Gold was up 3.21%. This is an even bigger one-day move than what you've seen during the banking crisis back in March. So there is a lot of fear out there on Friday. A lot of it has to do with the pending invasion of the Gaza Strip, which has not happened yet, but could be coming within the next 12 to 24 hours. So bond yields on Friday came down. Investors bought the bonds. Investors bought gold, your safety assets. This happens when there is a lot of fear out there in the markets, and it does pull money out of stocks. So that's the number one reason why stocks fell on Friday. Even more alarming, because on Friday, we were expecting 5-year inflation expectations to come in around 2.7%. They came in at 3%, and your 1-year inflation expectations, we were expecting 3.1%. They actually came in at 3.8%. So that shouldn't have happened. You should have seen investors selling the bonds, thus meaning yields going higher or at least staying flat. That did not happen. So that's really, really bad. It also did not help that on Friday, Jamie Dimon, JP Morgan's longtime CEO, said, quote, "This may be the most dangerous time the world has seen in decades. While we hope for the best, we prepare the firm for a broad range of outcomes." Jamie Dimon is seen as one of the most connected individuals in the world. When he says something like that, you usually pay attention. Ray Dalio also came out on Friday and says that there's now a 50% chance of world war as the Israel-Hamas conflict threatens to spread, hedge fund legend Ray Dalio says. Ray Dalio said the Israel-Hamas conflict was likely to trigger more clashes in other places, even potentially including the US and China. Now, whether or not this happens, let's hope it does not for a very long time. But when Ray Dalio is saying this, a billionaire investor, a lot of other people are thinking that this could escalate as well. Thus, why people bought gold and bought bonds. People are fearful out there. That's a dangerous market environment to be in. So here's the situation currently over in Israel. You have hundreds of thousands of soldiers sitting at the north side of the country, the east side of the country, and specifically the south side of the country. A lot of them are bracing for an attack from Hezbollah. We're going to get into that a little bit later into this video. That sounds like it could be coming any time now. But really the South, IDF, the Israel Defense Force, says it is preparing to expand the attack on Gaza. The IDF said its battalions and soldiers are deployed nationwide and prepared to increase readiness for the next stages of this war, with an emphasis on a significant ground operation. Quote, they are preparing to implement a wide range of offensive operative plans, which include, among other things, an integrated and coordinated attack from the air, sea, and land, according to the statement. Netanyahu this morning also told Israeli military members the next stage is coming, and he asked them if they are ready for the next stage. So it looks like within the next 12 to 24 hours, you're going to have a major escalation in this conflict. Now, in regards to the markets, I'm sure most of you guys don't have anything to do with this Israeli situation, and I'm going to leave my opinions out of it. Hopefully everyone does that as well, especially when they are investing. But when you get an escalation, that's where the markets get even more uncertainty. As you have seen airstrikes, missiles back and forth, the markets were looking at it and saying, hey, nothing's really changed. There's no invasion yet. There's no aggressive verbiage from Iran or any other major country out there. Maybe this situation just eventually dies down. On Friday, it didn't look like we were heading in that direction. It looked like things were getting worse. The uncertainty was growing. Now, as I have said many times, this conflict is a little bit different than others. It can have a direct financial implication because about 30% of the world's oil flows through the Strait of Iran. If we were to get into some kind of conflict, or Israel get into some kind of conflict with Iran, they could slow down that flow of oil or stop that flow of oil, and you could very soon see $10, $15, $20 gallons of gas at the gas pump. That would either have to be government subsidized. I was talking to my mother about this. They would literally have to pay for your gas at that point, or the economy would just shut down. You could see a depression-like scenario come out of that because there would just be nothing happening anywhere. That could obviously be very bad. And that's a little bit different than other conflicts here or there. Ukraine, that didn't have that kind of chance of causing that kind of, stress on the U.S. economy. This one could if the situation does get worse. And that's why it's so important to stay up to date with what's going on over here, because this can help you prepare and make more money. One of the more worrisome developments is this article from CNBC. It says Iran-backed Hezbollah joining Israel-Hamas conflict would be a game changer, according to a Middle East expert. This is what has been said. Quote, irrespective of Israeli Prime Minister Benjamin Netanyahu's decision, Hezbollah will not open a front from South Lebanon against Israel because it will justify Israel to destroy Lebanon. Iran has already informed Israel and the U.S. through third parties that it will rein in Hezbollah, he said. On Friday, Hezbollah's deputy chief, Naim Qassem, said his party was, quote, fully ready to contribute to the fighting, according to Reuters. The behind-the-scenes calls with us by great powers, Arab countries, envoys of the United Nations, directly and indirectly telling us to not interfere will have no effect, he said at a rally, according to a translation by the news agency. Basically saying, we don't care what any of you guys say. If we want to get involved, we will. So that creates a lot more uncertainty. Hezbollah is definitely much different than the Gaza, what they're currently faced with right now as regards to Israel. Hezbollah has a much stronger fighting force, a military, if you will, as well as closer ties directly to Iran. So from myself looking at this conflict, when you actually get the incursion from Israel into the Gaza Strip, that's where this situation could escalate a lot. That's potentially when Hezbollah or Iran or some other actor could get involved in this conflict, as there's just going to be a lot of loss of life. That's the bottom line to it. There's way too many people in the Gaza Strip to avoid it. That's the big problem. That's where I think the markets are uncertain. If this situation does not develop into something worse, if there is a ground incursion and, nobody gets involved, that's the best possible outcome for our markets. But long story short, the next 12 to 24 hours are going to be crucial, and whatever happens will affect broader markets. So in regards to the broader markets, what's actually very interesting about right now is you're kind of seeing a long-term cup and handle that has formed. This is the cup. This is the handle. Now, problem is if you fall and you break under this downtrending support line, part of this handle, then you didn't confirm this. Then it's not as good. Then it's not bullish. This is what a cup and handle typically looks like. It looks just like what we're seeing on the NASDAQ. If you break out above this top line, this downtrending line of resistance, then you can rally potentially to new highs of the cycle, which, if that were to happen on the NASDAQ, would put the NASDAQ at new highs. So very strange technicals that we are seeing on the NASDAQ, or at least the QQQ, the NASDAQ 100. If this situation does blow over, the upside here could be quite a bit. As you know, Tesla has earnings upcoming. I think a lot of you guys are Tesla investors. A lot of you guys are all in Tesla. That's why this situation is so important. Tesla stock fell over 3% on Friday due to this conflict that is happening in the Middle East. A lot of people don't want to pay attention to this, but then you complain essentially when Tesla's down 3%. It's going to have an effect. Now, Tesla has earnings this upcoming Wednesday, and as I have said before, really, the only thing that matters with Tesla earnings is the forward-looking statements. We've seen bad news. We've seen a lot of bad news. Margins falling, demand problems, all kinds of stuff. Tesla stock has gotten over it and has continued to march higher. Tesla looks ready for a breakout to the upside or a breakdown to the downside. Those forward-looking statements, specifically in regards to the Cybertruck, that is what is going to move Tesla stock. It really doesn't matter if Tesla beats on earnings or misses on earnings. As long as nothing is a huge beat or huge miss, the stock's probably not going to react to that. Last earnings, for an example, Wall Street was expecting an EPS number around 65 cents. Tesla came out with an EPS number of 92 cents. Tesla stock didn't move at all after earnings. Tesla stock moved when Elon said on their earnings call that there might be more price cuts to come if they needed to. This was obviously after a 100% rally in Q2 with Tesla stock, so you were definitely coming off of a big rally already, and that probably helped fuel more of that downside. But now you really haven't rallied much in Q3. You're still down. You're still lower than where you were before you went into last earnings. So I think there's a little bit more room for weak earnings. I think the markets are a little bit more conditioned for weak earnings with Tesla. After all, we've seen Tesla cut the Model 3 price and the Model Y price on basically all of their models. Tesla stock was green the next day. The biggest potential problem we could have that could send Tesla stock down is if Elon does not announce a delivery event for the Cybertruck. If that were to happen, I would expect 5 to 10% of a move down lower within the next day or two following earnings. If Elon does confirm the Cybertruck delivery event and when the first deliveries are going to be, then I would expect a 5 to 10% move higher, potentially going into the $300 range. The best possible outcome is we get the Cybertruck announcement and we also get estimates for delivery numbers for the Cybertruck. If Elon comes out and says, hey guys, we're going to do this delivery event the end of October. We're going to start delivering these vehicles on a date in November, but we're planning on delivering like 5,000 vehicles a month. Like for the next couple of months, we're going to ramp that up to 10,000 vehicles a month. That would blow away Wall Street's expectations. That would be a real, I don't know, a black swan event to the upside. Something that nobody is expecting that is really, really good news. I think that's also a possibility. We've seen a lot of Cybertruck gigacastings outside of Giga Texas, and it looks like production is starting to ramp up. It wouldn't surprise me to get a really high production number for the Cybertruck, considering these vehicles are basically already sold. Wall Street has put very little value on the Cybertruck, and they will be forced to, I believe, after this earnings. After all, if you have been watching this channel over the past week or so, the option activity has been exceptionally bullish. Even on Friday, Tesla stock was down 3%. You've seen 653 orders totaling $814 million with a positive order value of 78%. That means if you put $100 into Tesla options, $78 of which were bullish, either buying calls or selling puts. The other 22% was bearish, buying puts or selling calls. That's very bullish positioning heading into Tesla earnings, even considering what's going on in the markets. You could see a lot more downside from here if this situation were to get worse. But yet, people still feel confident buying positions in Tesla for an upside move after earnings. Even over the past week, you've seen about 4,500 orders worth $4.74 billion with a positive order value of 53%. If we do get that big upside surprise on earnings, it's all going to come down to the Cybertruck, unless there's big news on FSD or something along those lines, which I'm not expecting. I'm more so expecting good news on the Cybertruck. Then you could see the shorts even in a really bad situation. As I have also made it very clear, Tesla stock is by far the most shorted stock on our markets, with about $21.5 billion that is currently short in this stock. For an example, Nvidia, $12 billion short. Microsoft's about $13 billion short. Apple, even after some of the recent concerns that they have had, is only about $17.5 billion short. Tesla, by far the most shorted stock in the markets. Compare this to a short interest of the entire US stock market of $927 billion. So Tesla literally accounts, let's see, for about 3% of the total short interest in the stock market in just Tesla stock. But this article does say new US SEC rules to shine a light on short selling. Now, let me save you just the whole article. Let me summarize it. If you're a hedge fund right now, if you look at these 13F filings in which we're going to look at, they don't have to report their short positions. They have to report their puts, their calls, and their share positions. But for whatever reason, they don't have to report their short positions. I think that is flawed, to say the least. But you have no idea who is short in Tesla. Bill Gates could still be short in Tesla. We don't know. But after this new proposed rule change that is currently being voted by the SEC board members, well, if that does get approved, we would know that information. There would be a delay here, sometimes about 20 days. They're going to have to hash out the details, obviously. But you would get short reports of short positions. You would know who is short, how much they are short. Even after a about 20-day period, you would know what kind of collateral is used to back those short positions. You would know what kind of funding in general is used to secure those short positions. You would have a lot more transparency. And what that could potentially mean is an even larger move to the upside. I doubt Bill Gates or any of these individuals would like to have that kind of pressure on them if they were short billions of dollars in Tesla. I do plan to highlight this a lot more in the video that comes out at 9 p.m. tonight in regards to Tesla earnings, so make sure you guys are watching for that one. And if you take a look at the 13F filings, you're seeing very little reduction of positions in Tesla. You're actually seeing a lot of buy the dip mentality in Tesla. And look at that, there's actually a short position that is being reported to us that's up that is recently increased about 1,000%. But nonetheless, you're seeing 20, 30, 40% increases to a lot of these positions. 31%, 27%, 41%, 11%. 10%, 5,000% increase to their position. That's Granite Bay Wealth Management. A 700% increase to this position from TB Alternative Assets. Like, you are seeing a lot of activity buying the dip in Tesla. This recent drop that we have seen, just even in the last couple of dollars, has brought a lot of new money into Tesla stock. And as you know, Tesla is one of the most under-owned large tech stocks out there. So I think that does change in 2024. I think there's a lot of reasons to own Tesla, even in regards to this conflict. If the price of gas did go up that much, you don't think EVs would become a lot more attractive in a lot of people's eyes? Of course they would. Even the National Pension Service, which owns about 4.2 million shares, up their position by over 13% in the latest filing. If you take a look at the Google Trends data, the Model Y has recently fallen a little bit. The Model S and the Model X are pretty much based out, seeing a little bit of an increase, but the Model 3 is seeing the largest uptick as of right now. But let's now get into all of your Tesla stock news that you need to know for the day today. According to this article, Tesla's Model 3 and Model Y factory wraps aren't actually overpriced. And it turns out $8,000 for a wrap is pretty reasonable. This individual got in touch with two independent wrap shops in California, Sticker City in Sherman Oaks and Exotic Car Wraps in Los Angeles, to get quotes for full car PPF wraps, and the prices were pretty much in line with what Tesla is commanding. Sticker City doesn't actually do color wraps anymore, but when it did, $5,000 was the price quoted for us for a basic colored vinyl. Chrome Satin or any other sort of special color apparently ran between $8,000 to $9,000. Clear PPF, by the way, cost $6,400, $1,400 more than what Tesla is charging. Exotic Car Wraps, meanwhile, quoted $5,500 to $6,500 for clear PPF. When I told the rep what Tesla is asking for color film, he said they basically charge the same thing. So after all of that, I guess, if you will, backlash on Tesla charging so much for the wraps, it's basically in line with what you would expect to pay anywhere else. And I actually think this could be an important aspect for Tesla's business. Obviously, it's not going to be the thing that makes or breaks Tesla, but this could be an incremental add to revenue, or at least your per car revenue per, the sell AURP. That could definitely increase Tesla's number there. It's ASP, average selling price. My apologies. Sawyer Merritt is reporting Tesla has launched a developer API. Ford says it will temporarily cut one of 3 shifts at the Michigan plant that builds its electric F-150 Lightning pickup trucks due to supply chain issues. And France has just hit a new record. 20% of market buys are electric cars in September of 2023. New passenger car registrations in France increased in September by 9% year over year to 153,916, taking the year-to-date total to almost 1.3 million, up 16% year over year. And just to show you how far ahead Tesla is compared to the competition, this is the EV per share loss for every car that is sold. At Lucid, $544,000. At NIO, $35,000. At Rivian, $33,000, and at Ford, $32,000. It's going to be very hard for anyone to compete with Tesla. If you take a look at Tesla on a technical basis, Tesla held up above 250. This is where your 150-day moving averages were. I think it depends on the markets, how we are on Monday. If Tesla stock does break under this level, that would not exactly be great. But if you're looking at the NASDAQ, S&P, or basically any other stock, Tesla looks a lot better. a lot more bullish, which is another reason why I am so excited heading into Tesla earnings. Now, if you do get downside before or after Tesla earnings, your downtrending line of support is going to be that next level around 240. That's also your previous level of support, which was right above this long-term uptrending support line that's connecting from the lows of January back in 2023. If you get big downside under that, your 200-day moving average is the next stop of $211.65. But if this conflict does have a real impact to oil and energy, that's going to have an impact to our economy. Stocks could fall a lot from here. As I said in the last video, stocks could easily fall 10, 15, 20, 30%, and even go back to the lows that you've seen in October if this situation were to get really bad and basically cause a recession in the US, potentially even falling under that though. I mean, it's really hard to say. All I know is you could see a lot of downside from this conflict if it does escalate in the way it could. Hopefully it doesn't, but it could. So I think that's the number one negative catalyst or thing that is going for the markets or for Tesla stock. I do expect an upside move after earnings. I'm going to go over my expectations for earnings, what I think is actually going to happen with Tesla stock, and break down this whole SEC short position exposure thing a little bit more in the video at 9 p.m. tonight. So definitely make sure you guys are waiting for that one. That's one you really don't want to miss as well. So the last thing that I do want to cover here in this video, I think it's a very important point to make that we'll also highlight a lot more in the next video. But you have seen a lot of price target downgrades or decreases lately, and also downgrades of Tesla stock. This is actually bullish heading into Tesla earnings because it means more people are going to be essentially proven wrong. Now, this says Tesla's rating lowered to sell at stocknews.com. Now, I don't think this matters all too much. Stocknews.com, it's not a Bank of America. It's not a, Morgan Stanley. That would be something even bigger I think the markets would react to. But still, getting a downgrade by anyone is not exactly the greatest thing. Could have contributed a little bit to Tesla's downside on Friday, but overall, I don't think this is as big of a deal. Possibly creates an even bigger move to the upside coming after earnings. So that is going to do it for this video. Hit that like button, subscribe to the channel, and source your comments, questions, or concerns down below in the comment section. If you guys would like to come trade with us live in real time, I do send out all of my alerts. In the last video, I went through some of my hedges that I have, at least in the Robinhood portfolio. I have other portfolios that are also hedged out as well. If you guys want to see those, check out the last video. If you guys want to come see future hedges, any other trades that I put on from now until basically the end of time, every time in real time when I put on those hedges, link down below in the description of this video. Come join us. We will welcome you with open arms. Thank you for watching. Enjoy the rest of your day, and I will see you in the next one.